Hello, good afternoon, good morning, good evening, depending on the part of the world you're watching this from. And this is a weekend, a Sunday. I'm Bearable King, and I'm going to quickly run through gold to give an overview of what I'm looking at in the gold market. Now, what you have before you, what you can see on my chart now, is the gold monthly time frame. And as we can see, first and foremost, we can see that the market is moving in an uptrend. As far back as 2001, the price came up here, tested it, came down, came up here, tested it, came down, came up here, had a bit of a range here, came up, then came down to this point. We had inverse head and shoulder, and then the price came up here, and now the price is technically ranging, pushing for a possible higher high. Now, on my chart, these blue lines or these blue ranges you can see are the key areas on the monthly time frame from when the record of gold has been kept. And that goes as far back as the 1970s. But that's not what's important at the moment. If you notice on the top, you can't see any additional blue line, and that's simply because this is the first time gold is going to get this high from way back. There's no record that gold has been this high or ever valued this high from inception. Now that I'm looking at it, I'm seeing an uptrend. What I've done is I have marked the next anticipated area of interest. What do I mean? On the monthly time frame, in as much as we know that this is an uptrend, the last trend was from here to here. All these moves are internal moves, which are not significant before we had a breakout here. So applying Fibonacci from this point to this point, I can see that the price got a nice rejection by giving us a morning star around 70.5 fib level, which for me is an indication that the price is most likely going to get to this area, which is around $2,420 dollars per ounce. Aside from that, the reason why I'm looking for an upward movement is if you come recently, here we had a nice reversal by giving us something like an evening star. This is a reversal candlestick pattern, and then the price came down. After the price came down, we had a railroad pattern here. There was a rejection. Then here we had a strong shooting star setup. And after the strong shooting star setup, we had a bearish candlestick, like a railroad pattern. It's slightly bigger. And then what happened? The price came back down to this point. And from here, the price now came up. Now, observe the difference here. We initially had a railroad pattern. Then we had a bullish engulfing bar, which for me is a confirmation that the bulls are ready to push the price higher. And after this bullish engulfing candlestick, we've had two bullish months that have risen above this key area of interest. Looking at that, I'm expecting that the price most likely would move from this point, from this area, that the price is ready to move from this area to this point. Now, if you follow what's happening in the markets currently with the global war, China and Russia teaming up, trying to bring gold back as the world currency to displace the American dollar, you would see that there's a possibility that world investors will be looking into buying more of gold and reducing the value of dollars they've kept safe. So putting that in mind, I'm expecting that the price is going to move up to this area. But because this is a monthly time frame, it could take a year, it could take 6 months, it could take 3 years. I don't know how long it's going to take, but most likely the price is going to get to the area of 2,420 ounce per dollar. for $2,420 per ounce. Sorry about that. Now I'll go to the lower time frame, which is the weekly time frame. I'm going to zoom in because I'm not interested. I use monthly to look at what's happened in the past. Then I try to move forward so that I can anticipate what may happen in the market. Now, as you can see, in addition to the monthly range that I spoke about earlier, what we really have right now, as far back as 2020, the market has been ranging on the weekly time frame. So the price has moved from 1676, it came up to 2070, came back to that 1667, same area, same zone, tested this point, which is like almost the midline, came down here, then came back up to this point, which is around the same zone, and then came back here. Now, we know something about range markets. Range markets in time past, they'll say, okay, it keeps this level. Then what now happens? The market keeps going what? Keeps rising. And once it breaks it, it will move. What now happened was we had a slight pullback. Then the price came below that range to the monthly support region. Now coming to this point, we can see it gave a double bottom setup, which means that the breakout that we had here was a fakie, and then the price came back into the zone. We tested this monthly level, pulled back, and then pushed back to this high. All right, so you can see what I'm saying when I say it's a range market. Now, from here, two things can happen. It is possible that the price may fall from here all the way down here. But because of what I've seen on the monthly time frame, I know that this is less likely. So if the price is not going to fall all the way down here, we could see the price maybe pull back to this area, turning this resistance that I previously had here to a support level. Then the price could break above this level, come back to retest this point, and then push up towards the marked zone. Okay? Towards the marked zone. Now, why I'm showing you this is because there are some things that are very key. Once the price comes down to this area and it retests this area and it starts pushing upwards, you can buy. But once you buy and the price breaks above this resistance level, you should be looking for a reversal, because once it reverses, it may come back to retest this supply zone, which will now be a demand zone, or I could call it a resistance right now, which could now become a support zone, and then the price will push upwards. If the price pushes upwards, then we know that we'll take another buy around here till the price gets to 2,420 region thereabouts. I hope this is clear. All right. If this is not clear, you can find me on Telegram at BearbullFX. Okay. Going down to a lower time frame, which is the daily. On the daily time frame, yes, good. I'm actually glad about this. Now you can see the double bottom I spoke about on the weekly time frame. So the price came back to retest the monthly key area, retested it again. You can see this mini W here. You can see this mini W here. Change the color. You can see this mini W here. So what happened was the price came above it, retested it, and pushed upwards. Now, what happened here was we had the price come down. It gave us a W setup, broke above it, came back to retest it. This is the type of setup I'm expecting on the weekly time frame. Then what happened? The price pushed all the way to the top. Now, after I did this, the price now did what? Give us a major pullback. So we have our low here. We have our high here. And after this high, then we had our low here. So if we are going to mark it, we'll say, so we have a high here. a high here. We have a low here. We have lower high. And we have lower low. All right. Now, after this, we had equal low because this side are the same levels. Now, after this point, this high is not as high as this high. All right. So the next high is, let's say this is the high, this high and this high. This is higher than even this two. So what we have here is a higher high. And now here we have a higher low. And because we have a higher low here, we now know that, okay, we're now in an upward trend. That's the reason why I have this trend line here holding it. Now, the price broke above this level, meaning that, okay, yes, the upward trend is confirmed. So what we have here is what we call a three-step setup. There are some times that you see the market is pushing upwards, but the market is unable to break, meaning that the fuel or the liquidity is drying up. So we had the market push up. We had the market push up here. We had the market push up here. And now we had the market push up here, which for me, it's a confirmation that, okay, for now, the market wants to pull back. All right, so we had the push 1, 2, 3. What happens? The market is going to fall. Sometimes this move also happened downward. So let's say, for example, we had the price move like this, then the market comes like this, then the market does 1, 2, 3. Once it does that, most of the time, there's a probability that the markets may do what? Push up, because it simply means the downward trend is no longer sufficient to push the price down. Is that clear? So what we have here is similar to what we have right here. So we had the market come from down, up here, pulled back, came up here, pulled back, came up here, pulled back, came up here. Now that it's up here, what am I expecting? I'm expecting that this price is going to come down. How far will this price come? This price will come somewhere around here. Now, from here, we will now be watching for, will the price go back up, go higher? It's only time that is going to tell us that. But we'll want to observe what the market is going to do from here to this point, which is the reason why, for most people who know me, I had already given a sell trade as far back as 2048. Those that are on my Telegram page got in at 2048. And right now we're down, we're up about 300 pips, and we're expecting the market to fall all the way to this point. Right now, we are doing one of the hardest things when it comes to forex trading, which is waiting. So we're going to wait for the market to drop to this area. From here, we're expecting the market to drop. Now, what you can see here is an order block, which also respects the monthly time frame. Okay, so I'm expecting that the price will come down to this area, somewhere around here. We could get some weak drop, then the market will push above. Remember that we have an expected point above, around 240. Yeah, there. So applying my Fibonacci to this area, I'm looking at the market and I'm expecting that this price will fall to this 61.8 pip level, which is around 1,109, meaning that I'm anticipating that gold could fall from here to this area, which is where the order block is, or the demand zone, which also coincides with the monthly time frame. Then from here, the price would come as high as 2,240. Then the price would retest this high. Remember what I said on the weekly time frame, and then the price will move up all the way to our expected monthly zone. So all I've just done now is I've marked the chart on the daily time frame. So I'm expecting a move like this. So right now, if a client was going to ask me, okay, Bear Bull King, what do you think we should do? I would say, okay, look for a sell for about 1,000 pips. Or alternatively, because you didn't get in at the top, you could wait for the 1,000 pips to be done. After the 1,000 pips is done, once we get our candlestick reversal confirmation here, we would be looking for a buy, let's say from around here on confirmation, all the way to this point, which is roughly about 3,000 pips. Then from here, we'll be looking for a reversal back to the weekly top point to retest before we buy. Now going back to the weekly, you would see how, let me go back to daily. Okay, now if I take it back to the weekly, we drew this on the daily, that this is what we're expecting. Now going back to the weekly time frame, can you see how it fits in properly? So I'm expecting that it is possible for the price to come back to this support, monthly support region. And once it does this, it will break above and move all the way to the top. And once it does that, we will buy from here and anticipate that the price will move all the way to the top. So this is what I'm expecting for gold long term. Anything below like the 4-hour time frame, this I would be doing on the weekly review, because I've done the overview from monthly to daily, which should serve maybe a year or more, depending on how the market moves. Then every week we'll be reviewing how far the market has gone to know where we are and how we can move with the market. So if you're watching this, continue to check every weekend, because I will be updating this chart on what to expect on gold and other pairs that I trade on. Thank you very much for your time. If you want to reach out to me, make inquiries or comments, you can reach me on Telegram at BearBullFX. Stick around while I post other currency assets or currency pairs I'm trading. Thank you and bye-bye.